Welcome to my trading room. So shortly I'll be okay. So I said I'll be talking about support and resistance levels, and I'll also be talking about candlestick patterns. Okay, so we are gonna dive in. We'll dive straight in and we'll do what we have to do and finish on time. I don't like staying too long on screens. So we are talking about support and resistance levels, and we are also talking about candlestick patterns. So the first thing to know by two or more candlestick forms is support or resistance. Now, practical support is the downside downside of the chart. Yeah, that's where the support is. This is a support. This is a support. This is a support. Where two or more candles meet. Remember, that's what I say. This is a support. This is a support. This is a support. These are support. Groups of support. They are much. So this is even a zone. This is support. This is a zone. This is a support conglomerate of different support zones. This is a support. Now, topmost part is resistance. Topmost. So this is a resistance, this is a resistance, this is a support. Uh-huh. This is a resistance, this is a support. So that's what you need to know about it. So I want to draw out something so I can show you. This is that's a support, this is a resistance. So that's how it is now. So we have this is a resistance, this is a support, this is a this is a resistance, and this is a so that's how it goes. So we have the same thing here. This is a resistance, this is a support zone, this is a resistance, this is a support, this is a resistance, this is a resistance, this is a support, this is a resistance. So that's first thing, that's what you know. So if you're looking for entries, you know this is where you're looking for your entries from. So now moving on. Now, where two or more support or resistance meet, it becomes a key zone that becomes an area of interest. So what do I mean? Now I have to go to the higher time frames to do this. I'm using the 1 hour. I want to use the 4 hours so that you will understand what I mean. Now, where two or more support or resistance meet is now this is a resistance, this is a resistance, this is a zone now because I can see almost more than three. I can see more than three support here or resistance here. I can see more than three resistance here. I have one here. I have one here. That is two, three, four, five. So they are much. So this is a zone. Now, when I mean by a zone, I'm talking about um a price level where once price get to those level, is a chart level that once price get to that level, is either it consolidates before it moves further or it reverses at that point. That's what key zones really act as. So now this level I mapped out, now this level I just mapped out, it should be longer than this, but it should be longer than, let me just keep it there that way. Now this level I just marked out, this level I just marked out, what I'm expecting is that if price get to this level, already price has already touched here already, so it's even reversing upwards, and I'm still expecting it to reach this level before it reverses down. So first, this is a key zone. Now if price actually comes back to this level, I'm expecting a consolidation at this point, or a consolidation, a breakout, and a continuation trend, or I'm going to be still expecting a reversal back to the uptrend. And if it's always going to reverse, it's always going to hit past this level. That's what a key zone acts as. You understand? So now I've drawn out my key zones and I'm waiting for price to reach this level. Or I'm waiting for price to reach this level. That's what you should know about support and resistance. Now, This is the latest and the most strongest key zone at this point. It doesn't mean that there are no other zones that are valid. Now let's move further. This is the latest key zone. Let me delete this. It's not giving me what I want. So this is the key zone I'm looking at. So this is it now. This is the key zone. Now, why I drew it from this point is that I knew why I started from this point. Actually, it should be from here because this is because this is a ranging position. It was ranging. This is a ranging position. It should be starting from there. But I know why I reduced it so that I will not be paying too much attention to many levels. But this is the actual way of drawing these particular zones. And so this is a zone. Now, you discover that price reversed once it got here. Here, this is the latest trend that happened, and this is what price did. Price is reversing. It has made so many entries and reversal on this point. I don't want to use it. I want to delete it. This is a key zone. You all know that. So now, price get to this point. I'm definitely going to be watching out for reversals or consolidation and breakouts at this point. If it's going to continue, it must consolidate at this particular levels. It will consolidate. If it's going to continue downwards, it will consolidate. But if it won't, it will consolidate and reverse. So now what it's doing is that it consolidated here. It consolidated at this point and it's reversing now. It doesn't mean it won't come back, it will come back. But it's coming back with the momentum the momentum is coming back with is either to break out, retest, and move to its direction. That is what it's doing. So the key concept about key zone is that it is a level where you is an area where you look out for price where you look out for entries at. You understand? You either look out for a consolidation and retracement or a reversal, or you look out for a consolidation and breakout. That's what you look out for in that's what you look out for in a area of interest in a key zone. So this is what you do in key zones. Now this is a bearish key zone. We have bullish key zones as well. Now this is a bullish key zone. This is a bullish key zone. Assuming this swing never happened. Understand? Assuming this swing never happened, this is what I'll do. Assuming it never happened, this is what I will do. So what I'll be doing at this point is that I'll be looking for reversal or a consolidation first in this area. If it doesn't consolidate, I will not be looking for entries because price must consolidate first for reversal to happen. So it's not consolidating, I won't be looking for any entries. So if I drew it now, you can see what happened. Exactly at that point, exactly in that zone, there was some sort of there was a reversal. You understand? It's now where is the consolidation? This is the consolidation here. Price was consolidating, ranging in one direction before it moved out. That is, it created four swings. That is four swings. 1, 2, 3, 4 breakout. So that's what you should know about key zones. So key zones is where two or more support or resistance level meet. It becomes a very key zone and area of interest where you look for either consolidation and breakout, or you look for consolidation and reversal. So anything you're doing, any of your analysis you're making, or whatever you're doing, whether you want to enter a trade or not, you look out for area of interest for all your trade entries to be accurate. You're not trading haphazardly. You're trading area of interest. Understand? That's my own concept. You trade area of interest. That is where you're looking for your price change and whatsoever you're doing. You need to have patience. So assuming that I was not available when this happened, when the change of trend occur, change of character, or whatever you want to call it occur, then I met it at this in this place. I met it when price was already distributing. What I need to do is for me to wait for a consolidation, then I can now enter. So this was a consolidation. I can decide to enter here from this candlestick. So if you missed a breakout, wait for the retest. If you miss the retest, wait for a consolidation for you to enter again. You understand? That is how you do it. Without consolidation, don't enter a trade. You cannot enter a trade when it has started distributing already. If you enter a trade when it has started distributing already, you might end up in loss. Not as if the position is not correct. It could be correct, but the drawdown might not be favorable on your part. That is what you should know. So now, price moves in a zigzag manner, never straight. Each curve form either a support or resistance. That's easy something. Now, each curve form a support or resistance level. It's not a key level, but it's forming a support and resistance level. As price is returning back through that place, it seems to respect it at a point, but or at a time, not that much, except it is a strong level. So we saw price move forward, it come down, it form a support. Now, this support and resistance level that is forming as it's moving upwards or downwards is called a correction. It's a correction. You understand? Price cannot move straight. That zigzag manner is correction. You understand? It's correction. It cannot move. So if you're trend riding or you didn't start the trend early, you need to enter from the correction. So it has already started buying, and I saw this opportunity. It started giving a bearish candlestick. So I'll be in this bearish candlestick, I'll be looking for reversal patterns here to enter from. So that's how it works. So moving on, price move in a zigzag manner, and the zigzag manner are corrections. Then the next is identifying the important price zone is important. A breakout from this area means change of trend. You understand? Anytime price breaks out of a zone, or it is continuation, is continuing its trend, or if it reaches a key zone, it's either it reverses or it continue. And if it's continuing, you know that it's going on a very long trend again. So that's what you should note about support and resistance level. So we move on. We now have candlestick patterns. Now, how does candlestick patterns in any key zone you want to trade? One of the things you look out for is, are they how many candlestick patterns are available, reversal candlestick patterns are available to send signals to you for a reversal. For every key zones there is always a candlestick pattern that forms. It does. And if the candlestick patterns are forming, it doesn't mean that the reversal is happening just immediately. It's telling you what is going to be happening in few hours or in few days. That is what it's telling you. So if you move on to places like this, okay, first let me take you to the different types of candlestick patterns. There are some more. Now, if you really want to know about all the candlestick pattern, you can know it on your own. You can browse that out and you can check it. But now, for this course, I'll be talking about 5 most important candlestick pattern that is almost as accurate as whatever you may think of now. So we have the dodging. Now, a doji signifies indecision. That is, the next candle after a doji gives hint on the potential direction. So assuming that after a doji I have a bullish candlestick in a bearish trend, it means that I'm going to be having a bullish momentum soon. So if I have a bearish candle after a doji in a bullish trend, I mean, it means that I'll be having a bearish momentum soon. So if you go to the chart, you see it you see it a lot. Like you saw what we saw here. This is an uptrend. Assuming this is a trend, this is an uptrend. So we saw a red candle here, we saw a doji, and we saw a bullish candle here. Oh, we're absolutely expecting you. bullish momentum, isn't it? That is what we are expecting, but it never occur. It doesn't mean that it doesn't work somewhere else. One thing you should notice about candlestick patterns is that candlestick patterns are not, they are not the primary um things you use for analysis. If you use candlestick patterns for your analysis or to determine when to enter a trade, you're always going to have problem, because candlestick patterns too have their own flaws. They are not accurate all the time. This is what I said, something like I talked about dodgy. This is what happened now. We had a bullish candlestick, but yet it did not go bullish. Instead, we had another engulfing candle that changed the trend. That is what always happened. Now, it doesn't mean it's not accurate. It can work for some other position. Like here, we can see a dodgy, we can see a bullish candle, and we can see a bullish right, and we can see it upward. So that's how it happens. It's not even a change of trend. We can see a dodgy here, we can see a red candle. It never sold. We saw an engulfing candle, and here the trend. So most of the times, it's not as if these candlesticks patterns are always accurate, but it's something that you really need to use. So the dodgy is one thing you need to look out for. We have pin bar here. We have pin bar. We have, okay, let me not talk about that now. So a dodgy is important. A dodgy is important. You have to work. It's a reversal signal. Yeah, a dodgy is important. A dodgy is very important. Mm. These are levels it was accurate with. Okay, this is our levels too. It was accurate with, like we can see the dodgy here, we can see the bullish candle, and we can see the trend. So at some point it can be accurate, at some point it can be, it can always. So but what you need to look out is that, what you need to look out for is that, what you need to look out for is that after, you have to first and foremost, before you even look out for these dodges and whatever in any zone, you have to make sure that it's in a key zone that you're looking out for this candlestick pattern in. If it's not in a key zone, it might not really play out the way you think. That is it. That is it. Like, if you move to this consolidated zone, you can see there are presence of so many dodgy here, and price went upwards. So that is how it is. So it might not, when it comes to candlestick pattern, it might not really work well if it's not in a key level or in an area of interest. Like I said, if it's not in a key zone, it might not work well the way you think. So the only place you always look out for candlestick patterns are always in a key level. You understand? Always look out for candlestick patterns in those places. If you look out for it in a trend riding, you might fail. You might fail. Okay, imagine here we had a engulfing pattern, but we never had a bearish trend. Why? But it doesn't mean it's not accurate. This is not a key zone, so you cannot even be looking for a candlestick pattern here. We had the same thing here, but we never had a bearish trend. You understand? So those are the things you look out for. So if you're looking for candlestick pattern, make sure that it's in a key zone you're looking out for candlestick patterns for it to be accurate. So we have, after engulfing patterns, we have bearish engulfing, we have bullish engulfing. I showed you an example. This is an engulfing pattern. This is an engulfing pattern. You understand? The current candle, when the current candle, this is the current candle. This is the subsequent. This is the current candle. This is the subsequent candle. When the current candle overshadows the last candle, it is engulfed. So it's an engulfing pattern. So this is the same thing in a bullish trend. When in the change of trend, when it's changing to bullish, this is what you see. When it's changing to bearish, this is what you see. When the bearish candlestick covers the bullish candlestick, it's an engulfing pattern. Don't forget, you look out for all these patterns in key zones. Now we have pin bar or hanging man or whatever you have to call it. Same thing, where it has a long wick and a small body, and in one side of the price. So we have hanging man, we have morning star, and we have evening star. Evening star occurs in uptrend, morning star occurs in a downtrend. So that's all for now, and I hope you got the message I was trying to pass. So don't forget that Don't forget that support and resistance levels. So what is really really important about support and resistance level is that you want to identify the key zones, and you want to be looking out for candlestick patterns in these key zones. And if you have a fair value gap or whatever, so that's what you really use support and resistance for. First, to draw out the key zones, and you need candlestick patterns so that you can find out, you can look for candlestick patterns in these key zones so that you can enter a trade. So that is all I can offer for this class, and I hope you got something so valuable. Nobody learns everything at once. Everybody learns things bit by bit. Understand? You cannot get to that level of perfection if you don't implement what you learned today. So first, the pathway to perfection is always implementing. So for whatever I'm doing, always go back to your chart and try to identify as many key zones in different currency pairs as much as possible. I'm a US 30 trader, I'm a Wall Street hustler. I trade just US 30. That's what I like trading. That's what I feel like always trading. I have so much passion trading US 30. That's what I trade. It gives me entries almost every day, and I'm okay with that. So you can decide to back test and test other currency pairs to know what is good for you. There are so many pairs. Just try to draw out key zones in many currency pair as much as possible. Try understand key zones very well. Draw out as much as possible. Back test. Know what price did in each key zones, so you can always have a knowledge of it. Try to identify as much candlestick patterns at all. That's my task for you today. Have a nice day and stay safe.